Hey everyone, welcome to Talk ETFs, ETF.com's weekly video series. My name is Sumit Roy, and I'm Senior Analyst here at ETF.com. This week, I'm speaking with Dan Weiskopf, who's Senior Portfolio Manager at Tidal Financial Group. Dan, I want to start off by asking you about active ETFs. As you are well aware, there's hundreds of active ETFs on the market today, but they're not all the same. Some active ETFs seem to be more active in name rather than in whatever strategy they have. I know you have an active ETF on the market, which we're going to talk about in a second, but can you kind of give us a sense of this idea of active share and what it means when it comes to ETFs?
Yeah. So exactly to the point. And I'm the guy who always talks about how structure matters. So there's often situations where people have or firms have represented a very active strategy, but in fact, there's 60-70% overlap with the index, right? Um, eh, Investors need to be aware of those funds that actually are active and are truly trying to earn that fee and provide a high active share. We're pretty cognizant of what that means. For us, when you've got a fund that is 75% not overlapping the index, right? That's high active share, meaning 25% differential is meaningful. In some of the funds that we're managing, it's as low as 10% or 14%. So cool.
So yeah, Dan, I'd love to talk about some of those funds. You have one with the ticker symbol BLOK, BLOK. It's in the crypto arena. Obviously, this has been a very hot topic this year. Can you talk about BLOK? Is it very active? And can you talk about, how this fund differentiates itself versus something like a spot Bitcoin ETF? What type of exposure does this have? And how is the performance going to vary compared to that kind of fund?
So when you think about block, yeah, actually, people say crypto, but what exactly is crypto is the first question, right? We're not trying to replicate, we'll say Bitcoin. Bitcoin is its own asset class. What we're trying to do is invest in the infrastructure around blockchain, which involves crypto. So we might have 10% exposure, up to 10% exposure directly in crypto. It might even be a little bit higher with some of the companies such as MicroStrategy that owns Bitcoin, right? Just to be really clear though, when I'm speaking about crypto here, I'm only speaking about Bitcoin exposure. We don't own anything beyond that right now. And it's only in the spot ETFs or in MicroStrategy as of right now, or MetaPlanet for that matter, which I'll talk about in a second. But then we're also investing in the Bitcoin miners, which have pivoted further into data center as a business and really, really exploded. And it's very exciting space, I would say, because it kind of combines Bitcoin and AI, which is like the new buzzword AI, right? I guess the answer to your question further is we've got about 50 holdings in the fund. And we had to develop our own categories to represent our process, which involves Bitcoin miners, which involves the transactional side of the business, venture capital as well, et cetera.
So Dan, very interesting product you have there, and you manage another pair of interesting products, and that is Nancy and Cruise. These are two politics-themed ETFs. Of course, politics has been front and center. The election was not that long ago. We're going to get a new administration in a few
Yeah.
weeks from now. Can you talk about these two ETFs? I know these were very popular. We wrote a lot of articles about them on ETF.com. How are they doing today, and are they performing pretty well, based on what you've seen so far?
Yeah. Well, maybe no surprise, but to many it has been a surprise, I suppose. One fund, which is NANC, that's the ticker, which focuses on the Democrats, right, has done phenomenally well because they lean into technology. And then the Republican one, which is Cruz, KRUZ, is the Republican side of things. And they're more investing in um, uh, industrials and manufacturers and energy than they are in technology. And by the way, the interesting part about these funds, particularly, is the fact that they're using the ETF wrapper to divulge, to flesh out how members of Congress are actually investing their own capital, right? It's a whole new use case for the ETF wrapper.
That's amazing. So, Dan, we've talked about 3 of your ETFs, and you've mentioned how, there's a wide range of active ETFs. Can you talk about your lineup? Do you have other active ETFs in the lineup? And maybe you can point us to some of the more active ETFs, the ones that have really high active share.
Well, I mean, I would say Block has real active share, by the way. And to that point, people think about active management often in the context of lots of turnover. We don't think that's necessarily required for something to be high active share. In our case, we're drilling deep into the companies. We understand how management is thinking in a lot of these companies. We're visiting the companies. I think that's something that's frequently lost in the context of active management and how people think about it. Then the other thing I would say is, unlike a lot of active funds, we're very diversified in our weightings. So in the case of Block, when something gets up to like 5.5%, 6%, we're looking at trimming. We scale into a position in increments of 50 to 100 basis points, as we get more comfortable with management delivering further on their outcome. And as changes, obviously, in the strategy occur. Because it's a very dynamic strategy, meaning that the blockchain area. And I'd say one other thing, the interesting part about, as people say, blockchain or crypto or tokenization, this is about trying to capitalize in much the same way the ETFs capitalized and changed the financial services industry and the asset management industry. That's what's happening with blockchain. And when you think about a firm, let's say like BlackRock, I think you mentioned them earlier in the way of Bitcoin, right? But I think when you think about BlackRock, I think what they're doing is pivoting into tokenization and how that's going to change the asset management business and how ultimately they might be delivering on like private equity or private debt as an asset class on chain.
And I just noticed Block has delivered phenomenal performance this year, 53% or so since the start of the year, approaching $1 billion in assets under management. Dan, you've given us a lot to think about, ton of great insight. Thanks so much for your time.